Welcome to the Mills Knows Bills podcast. My name is Mills Bender. I'm the founder and CEO of Mills Knows Bills, where we help you, variable income earners, master your money in 90 days. The point of this podcast is to help you make the most of your fluctuating income so you can stop living paycheck to paycheck, pay off your debt twice as fast, and get on track toward reaching both your personal and professional financial goals. Now, as I continue to grow my team here at MKB, you may have some guest hosts from time to time. However, our goal does not change. Whether we're bringing in a guest speaker, having an in-depth conversation about our personal finances, or talking about a topic that is of interest to you, our goal is to help you master your money. Hello, MKB family. Welcome back to another episode of the Mills Knows Bills podcast. I'm your host as well as CEO of Mills Knows Bills, Mills Bender. And this season, we are actually kicking off our podcast series different from what we've had all throughout 2024. Rather than just answering burning financial questions, we are going to be bringing in a special guest each week, highlighting their area of expertise and honing in on what each business owner needs to know and maybe some common misconceptions that they have regarding that professional's experience. I'm really excited for the guest that we have today. We have Jeff Rountree. He's in commercial insurance, which for all of you business owners out there is incredibly important to have. So Jeff, please take a moment, introduce yourself, and we'll go ahead and get started just having this fun conversation today.
Thanks, Mills. I appreciate it. As you said, my name's Jeff Rountree. I'm located in Northeast Jacksonville, Florida. And been doing this about 16 years. So started out in the life insurance world, and I've just kind of progressed to where we've taken it to the point of protecting business owners, and really just taking a deeper dive to help them understand where their risks lie, and then how can we mitigate those risks and do that as less expensive as possible, so they've got revenue to put back in their pocket, which I know is a topic you love. So.
Yeah, you're speaking my language. This is great. It's funny. I feel like a lot of people, when they start their college career or even just right out of high school, their career, they don't think about going into insurance. And so how did you find your role in insurance?
That's a great question. So I actually started my career as an EMT. So going back to high school days, I worked in the emergency room for almost 5 years, did a lot of CPR, was in school for medical. And really my brother got into real estate. So I started dabbling as a realtor. And then within that process, I met someone that recruited me to get into insurance sales. So I started out as a PNC guy, home and auto, did that for a little bit, and then was recruited to go work for a corporate and do life insurance. So that's how I ended up in Jacksonville. No, never, ever, ever planned like EMT, going to physical therapy or PA school. And now I'm an insurance guy, 20 years later. So, but no, you touched on a really good thing. Like my industry, and I'm not necessarily a young guy, I'll be 50 in July, just to kind of put that out there. But my industry, most of the commercial brokers you talk to are in their 60s and 70s. It's a field that is really wide open for young people to get into, start learning at a young age. And, it's one of the few fields that you sell it once and it keeps paying, right? Like as long as you take care of your clients, those residuals keep coming in. So, probably the biggest thing is, coming from the EMT medical world, obviously I love to help people. That's just always been in my blood. And this is an industry where not everyone's out to help, the little guy. Right. And that's really where we thrive at, is helping the little guy. So
I love that. And you said that you started off in PNC, property and casualty, which is typically what a lot of consumers tend to know about. It's interesting how many times I speak with a business owner and I ask them about their insurance and they automatically go to my home or my auto. And I say,
Yeah.
no, your business. And
Yeah.
it's a little scary how often they don't understand that they should have business insurance too. And so can you talk to us about even just what that entails? And then we can kind of dive deeper into the different types of coverages different businesses should have.
Yeah, great point. Great question. I can tell you, we offer a free policy review and risk analysis. And I don't use that term lightly because you just touched on most business owners, they don't even know where their risk really lie. They buy insurance because it's a box to check, right? But a garage door installment company has very different risks than a tree service company or a roofing company or a doctor, right? Like all stuff we have written in the last week. They have very, very different risk. And they have very different needs when it comes to mitigating those risks and how we transfer those risks. So, a general liability for a physician is very different than the general liability from, the plumber.
Yeah.
They're very, very different risk. So that's one thing that we do that I do think is different, right? I tell everyone cost is relative. I can get you a cheap policy that only covers 10% of your risk. Right. And yes, it's great. My policy is cheap, but if you're not covering the biggest risk that you have, essentially your business is now at risk, because unless you have enough capital stashed away to pay whatever that claim may be, it's probably going to be denied. And I have dozens of examples, because I can tell you during that risk analysis and policy review, this is going to terrify you. I probably find errors almost 70% of the time. 70.
I believe it.
So 7 out of 10 either they're coded wrong. They're with just completely a carrier that doesn't treat that risk right, because the carriers, it's not what they specialize in. But that's, again, where we get to shine. When I get to look at a policy and talk to a business owner and I ask, okay, well, you're a roofing guy. Well, what are you doing? Is it industrial, residential, commercial, repairs, re-roof, new construction? What are you doing? Because that first answer tells me which carrier to go to. And now we can kind of dig into the exclusions and endorsements and make sure wherever that greatest risk is for you, we've put you with the carrier that's going to take that risk and not give us a problem when you have a claim. Because ultimately, that's all we're trying to do, is give you the protection that specific business needs.
It's interesting because I find that the business owners that I speak with who don't have insurance, it's mostly because they don't actually understand why they should have the insurance. And coming from my perspective and my background being on the advising side before doing the CFO work, I would always tell somebody, you're protecting your greatest asset, your ability to earn income. And it's a protection around all of the progress that you've made. And so if you're a business owner who's scaling and hiring and grow and, bringing in all these individuals, if you don't have that insurance policy and something happens, what are you going to do if you don't have enough reserves on hand to cover the cost of that issue? And how are you going to keep your business moving forward? Do you find that a lot of the business owners you speak with that don't have insurance have that similar mindset? They just don't understand, or is it something else altogether?
I think it's a little bit of a multitude of things. If I find that they don't have insurance, my first question usually is why, because I got to get to that root cause first. Sometimes it's a bad experience. Like I just said before, maybe they had a claim a few years ago. It was denied. They got left hung out to dry. And now they're like, insurance is a scam, right? And it's, if you didn't have the right policy and it wasn't written right, and it's not covering what you need, it's not a scam. You had the wrong thing, right? So I think it's a little bit of those things. I think it's an education thing. I also think, insurance for a business owner, we're all so busy, right? And I think it's a box to check, right? There's really not a lot of thought goes into it other than just, checking that box. And that's where I think we run into, that issue where you have business owners that don't have it, or don't really have what they need, if that makes sense.
Or they might have outgrown what they needed before. I think about...
I find that all the time. I get a business owner come in and, been in business 5 years, and I'll say, when's the last time you talked to their agent? And they're like, 5 years ago. And I'm like, okay, have you hired employees? Have you added this? They're like, yeah. And I'm like, how's your revenue? Well, we were at 1 million. Now we're at 6. And I'm like, oh boy, like you're going to have some sticker shock with an audit here when they come back over those last 5 years. And it goes all the way down. Like, if you just look at a policy, and I tell business owners this too, and sometimes when you talk about not having insurance, if you get sued, whether or not the allegation is true, you have to defend yourself. It doesn't matter if the allegation is true or not. And we are in the most litigious society you've ever seen. And we're in Florida, the most litigious state in the entire country. Nobody sues like they do in Florida. You think it's New York, but it's Florida. Trust me, especially on that PNC side. But what I tell these guys is all the time, just look at your GL. You can have a basic general liability policy. And if you have 5 employees and you don't have employment practices liability added onto that coverage, and an employee sues you for whatever, sexual harassment, discrimination, whatever it may be, you still have to defend the allegation. Again, no matter how untrue it is, they still have to defend themselves. So now, if you don't have it, do you have the time? That's the biggest one. And the money to defend yourself. And there's ways that we mitigate that risk too. But these are all conversations where I go from, hey, Jeff, I need a quote for insurance, because that's the typical, I just need a quote, right? Can you give me a rough quote? And I go, well, a rough quote, it's pretty useless, right? Like, I could give you a calzone that's been cooked 5 minutes. Probably not going to be what you really want or need. And we're not really solving the en route problem. So I run into all the things you're talking about. Like, literally, it's the daily conversation. Like, let's take a step back. The first thing we need to do is paint a picture of the business, and let's put our fingers in the dots on where the risks are at, number one. And then again, back to the beginning, how do we transfer those risks to the carrier that wants them, and they're going to charge us the least amount of money for it, period. Like that is as simple as it can be.
What would you suggest for the business owner who already has insurance? How often should they be getting a requote or, a review, I should say, with somebody like you?
That's a good question. I think it's probably always good, at least every 2 years. If it's a growing company, I would tell them every single year.
Okay.
If you hire or fire one employee, it changes everything. Literally. There's stuff that we need to update if you hire or fire one employee, especially if there's commercial auto involved, workers' comp involved. That's stuff that we need to update on a payroll side, on just driver liability and premiums. Like if you have commercial auto and you let an employee go that is hurting your commercial auto premiums, and you don't tell us the day that you let him go, 6 months, you've been paying extra premium that you didn't have to pay, literally. So if we're just proactive, and it's one thing I preach to my owners all the time, if you hire someone, fire someone, give someone a raise, buy something, right? Move, any of these things, the first thing you should think of is I need to call Jeff. Like that's just I need to call Jeff. Because all of those things not only affect your risk, it affects carriers that want your business, it affects your premium. And not only that, it affects gray area where, if we have a claim and there's drivers not on an auto policy, or there's drivers that are on a policy, you create gray area for a carrier. And I've been doing this a long time. I worked for a carrier for 3 years. I won't say who it is, but I worked for a carrier for 3 years. I've sat in the meeting where I've heard the conversation. Does it cost us more to fight this or pay it? I've been there, right? So for me, that's where I try to get business owners to understand I can write you a simple quote, basic all day. And insurance to me, it's a pay now or pay later product. You're either going to pay now and pay more. So when something happens, you get to sit back and chill, right? or you're going to pay less now. And when something happens, you're going to probably have to step in, dig in your wallet, dig in your calendar, and create a whole bunch of extra stuff for you. So again, that's where we take it back to the basics, and we just try to get back to that conversation of figuring out where those risks lie. And again, I'll say it over and over because I have the conversation all day, and transference and all that good stuff. So I'm passionate if you can't tell me.
I love the passion because I too am passionate about my role. I know that it's hard for others to understand why we are passionate about finance, but it's okay. You mentioned something earlier about any major change in the business should be communicated with the insurance provider. Most of our listeners are business owners in the blue collar space. They're generating, let's say, somewhere between 3 to 5 million top line. They have a team of somewhere between 10 to 25 employees, right? That's kind of our average demographic. That business owner doesn't have time to always reach out with any given change. And so what word of advice would you give to that business owner to make that process feel less daunting?
Yeah, I'd probably say usually in a business of that size, there is a go-to person. There's a person running that, helping that day to day, whether it's an HR person, whether it's an office manager, whether it's one of those. That connection is really important, right? Like we have support staff here. If you call my office, my wife actually answers the phone. So we are family owned and local. But that's where we try to make the connection, right? Like, yeah, you're busy with all kinds of other stuff, and I don't expect that call from the business owner. But for me, it's again back to the education side, right? Like as long as it's front of mind and they can, whoever's in the office that handles that employment stuff, that's the connection we want to make on that sub level. Because, just going back, like, if you take a client that we have that has, about 80 trucks, right? Big AC company. They do a lot of hiring. They do a lot of firing, unfortunately.
Part of the game.
Right. And if we can get ahead of that hiring process, and when we talk to the hiring person, we tell them as soon as you think you have someone you want to hire, send us their driver's license so we can run an MVR. We can check their driving history. We can see how it's going to impact your insurance. Don't hire them. And then you tell me on Friday, hey, they start on Monday. And now I have to deliver the painful news that they increased your auto by $3,000. We can prevent that from happening and really keep you from hiring that. It's not a bad hire. Maybe they just had a bad run, but it's bad for your business, right?
Yeah.
If you can find the same talent that's not going to cost you $3,000 more a year. That's where we try to, if they've got support staff, great. Let's connect their support staff and our support staff, because I can't take all those calls either, right? Like I couldn't take all those calls. I'd just be on those all day. But that's the connections that we try to make it, and the service level that we try to provide, and take that off their plate if we can.
I think that's incredibly valuable. The getting the quote in advance of formally making that new hire. We're in December when we're recording this podcast episode. And so naturally here at MKB, we've been speaking a lot about year-end planning and preparation for 2025. And one of the conversations that keep coming up, and a lot of our individuals want to learn more about, is planning the operational goals, like hiring new members around financial slow months. So that way you have the time to actually train that person. And in order to withstand that affordability during those slower months, setting aside that individual's pay for the 3 months leading up to when you're expecting to make that new hire. Now, we talk about that new person's pay, but what a lot of business owners don't anticipate when they're thinking about that pay is the taxes that you pay on behalf of that new team member. The insurance. I didn't think of the insurance. I think that's such a critical point. Maybe additional uniforms, right? There's more behind that new hire than just their pay. There's more than just the time it's going to take to train them. And so when these business owners are looking at making the new hires, they should incorporate all expenses, including that insurance, because
Yep.
You're extending your risk by bringing in new team members. And so it's critical that you continue to protect the asset that you are building, your business. And, what's one word of advice that you wish all business owners took into consideration? Something that you feel like no one knows about, but they should know about?
I'd probably go back to that employment practices liability I brought up earlier. It's a way that I get in the door in a lot of places, because I'll ask a business owner, because most business owners have commercial insurance. But if they have employees, it's a question I ask so we can do a policy review. Do you have employment practices liability? And if they go, I don't know what that is. Well, to me, if you have employees, that's the number one coverage that you have to have. It's the one thing, the only thing that's going to defend you from probably your number one risk. Most of the time, it's not a client suing you, it's an employee. That's just the truth of the situation and the society that we're in. So if you don't have employment practices liability, we just put our finger on where your greatest risk lie. And if it's not in your policy, I don't care how cheap the policy is, because really it's not protecting you from your number one risk.
We're gonna touch a hot button on this, and I hope I'm not putting you in the hot seat on this question, but it's actually
I like the hot seat. It's all good. Go ahead.
It's a timely conversation because I actually have a client who does not have EPLI. We've spoken about it multiple times. And over the last, let's say 18 months, the company has been sued by 3 different employees. And this client lives in a state that
stresses me out already.
It stresses me out. All right. I'm not going to state where this client lives, but it's not in Florida, and it is a pro-employee state right out of the gate. So you can probably put the pieces together on that. Yep. And so it didn't matter that the claims of all 3 individuals were false. As you stated earlier, this business owner still needed to pay the lawyer fees and still needed to pay some type of settlement simply because their hands were tied in the situation. And so this occurrence for this client actually happened in 2 separate instances. There was 2 team members that sued back last year, and then 1 person about 6 months later. And so during that time frame, we were actually looking at getting EPLI. We kind of missed the timing there because around the time we had started looking at quotes, the 3rd team member decided to, go for it. But this client ended up getting some advice from their law firm, and the law firm said, don't get the EPLI because it will actually cost you more than it would if you were to just cover the legal fees on your own. And so I don't really know how I feel about that. What are your, I know how you probably,
answer, which
I know how you probably feel about it.
My filter doesn't work well. Sounds like a law firm that wants to make some more money, in my opinion, but
you're not wrong.
I'll say it. You put me on the hot seat.
I put you on the hot seat, and then I'll follow up with a trickier question. But, why would the law firm state that outside of just, hoping to get more money in the long run?
It's not too far out of the realm, and I have conversations with business owners all the time too. We need to insure you for as much as your risk is, right? Like if I have a small business, do they need a $5 million umbrella when they generate, $250,000 a year in revenue? No, that's just a waste of money, right? Depending on what they're doing, right, and where the risks are. Yes, you can be overinsured. I think that is a very aggressive statement to say that you don't need EPLI and you can just cover it in attorney's fees, because that is a super big blanket. I mean, how do you know what that actual, what you're going to have to pay out? How do you know what that final number is going to be?
You don't know what the settlement is going to be. You might know the legal fees, but you don't know the settlement.
That's again, immediate response is, I understand why they're saying that because they want, come here for your legal fees. But I can tell you, I solve that in multiple ways. So again, I try to take business owners wear a lot of hats, right? You probably have this conversation with them a lot. There's hat bills sticking out in every single direction, right? And we try to take as many of those hats off their head as we can, right? To take some of that, again, stress and risk and move it away. So I also represent Legal Shield, which is a great legal insurance company that essentially, as a business owner, I've used it a couple times this year. It cost me $130 a month, right? And I can send them leases, I can send them contracts, I can send them all kinds of stuff that doesn't cost me anything for them to review. And if I ever get in a pickle, right? And if I don't have EPLI, it is one other way, sometimes less expensive, depending on the risk, for you to have legal representation and not have to suck as much as your time and as much as your money when you do end up in this type of situation, which, again, back to 20 minutes ago, if you're a business owner with employees and you're open long enough, it's almost not even a what or anymore or an if anymore. It's a when. Yeah. It's not if I'm going to get sued. It's when am I going to get sued? So you can have horse blinders on and think, I take care of my employees and I do this. You have no idea when that employee is going to just tilt. Right. And when you just said before, the third employee now sees what's going on and goes, well, hey, I have one of those. Mm-hmm. I want to throw my hat in the ring. So again, if you're relying on, I'll just put funds away and, I'll pay the attorney. Well, what if there's 5 of those employees? Again, no matter how true the allegations are, what if there's 5 of them? So I'm really hesitant to take that recommendation because there's too many unknown variables there to say, yeah, you can pay it in legal fees. EPLI is not that expensive. It's just not to the point where I'd say just absorb that risk. Because I have this conversation all the time, right? Plumbing guy this week, to have fungi and mold in his policy runs him an extra $20,000 a year. Well, it's only $100,000 of coverage, right? Ever been sued for, busted pipe and fungi? No. So, right, if we put that $20,000 away, it was actually almost 24 a year. In 4 years, you're self-insured for fungi and mold because the carrier is only going to pay you $100,000 anyways. Yeah. Right. That's the cap on the coverage. So there's always self-insurance conversations that we can have. And when you get big enough, you can go captive, which is a completely different conversation that we can turn that insurance from a massive liability for a, $10 million company that's spending $1 million a year in insurance, right? Or $750 a year. We can take that from a liability to a line item asset, which I know I see you smiling already, right? Like there's other ways that we can do this. It's just, again, back all the way to policy review and risk analysis, right? Like there is no blanket, that there isn't one. It's different for almost every single business. And this goes all the way back to life insurance. I have people all the time, what's it going to cost me? I don't even know what you need. You got 8 kids, 1 kid, no kids, 10 mortgages. What do you got? Like, you got to help me paint a picture so I can solve this problem for you.
It reminds me of a conversation.
You pushed my button, Mills.
Yes, listen, you know what? That was kind of the goal. We like hot topics on here. But I like the fact that you take a custom approach because you don't know, number one, how much it's going to cost, or number two, if you're even going to be the right solution for the business owner, unless you have that conversation first. And so I think we talked a lot about the commercial insurance and the EPLI. You actually brought up a topic that I've been wanting to pick your brain on as well, because it's becoming more and more popular in terms of conversations lately, captive insurance. For those that are listening / watching who have never heard of what that is, give us captive insurance 101.
So essentially, and this is a much longer conversation that typically has, but when you've been in business for at least 4 years or 5 years, and you're spending over $100,000 a year on your insurance between your auto, workers' comp, liability, professional liability, umbrella, if you're spending over $100,000 a year, there are resources out there that we work with that you can essentially join and create a captive program. And what that means is, the greatest example I can give is if you think of like group life insurance, right? Mm-hmm. Where you're pooling all of the risk. Everybody's paying into that risk pool. And essentially the risk is spread, right? Well, when we build a captive policy and we put up a little equity capital in the beginning, essentially, as long as we're controlling our risk and keeping our loss ratios down, which we give you all kind of tools to do that, talking commercial auto with GPS and tracking and cameras and all that good stuff. When we mitigate those risks and our loss ratios are low, by the time we get to the end of the third year in that investment pool or that spread pool that we've joined, we're typically getting back somewhere between 40 to 60% of our annual premiums in the form of dividends, because all that money is going into a pool that's invested. And insurance is all about law of large numbers, right? I can tell you, we can take plumbers, right? We'll go back to the plumbers, that we know how often there are claims, and there's variables there, right? Years in business and all this other stuff. We can, how often the claims are, how much they're going to cost usually, like we can break all that stuff down. So when you join a captive and we can mitigate the risk, it's very predictable. It becomes very predictable where we're going to be and how we're going to perform. I have clients, by the time they get to the end of their fifth year, that dividend is now 90%. So if you're talking about a company, which we have them, that are spending $2 million a year on insurance, by the end of year 5, which you would have been in business anyways, you'd still be spending $5 million a year on insurance or $2 million a year on insurance. And now you're getting back up to 90% of that in dividends. Now that same liability that you're spending $2 million a year, you're spending $200,000 on, and that $1.8 million is going back into the business. There's nothing else like captive, and it's specific businesses that fit that.
I was about to ask you.
Yeah, so it's very specific who gets in there on the captive side. So that's the shortest route I could go, because I want to go a whole nother route on that, but I know we're getting short on time too. But I do want to touch on one more thing.
Sure.
So that leaves out the little guy, right? The little guy that owns a restaurant. You know, he's not spending over 100, 150 grand a year on premiums. He's spending 40.
Yeah.
How does he get in a captive? How does he get in something that we can control the premiums? We can mitigate risk. We can, pool the money together. And at the end of the year, maybe they're not getting 90% back, but maybe they're getting 30% back on the premiums they paid in. We're creating those now that don't require equity capital. So I can take a restaurant that's spending 20 grand a year on their insurance, get them into our focused restaurant insurance captive, which is just for restaurants. It's just restaurants, coffee shops, not bars, restaurants, right? I can get them in there and get their premiums for 20 grand down to probably 15 grand. And by the end of the second year, they're getting back up to 30% of those premiums, depending on loss ratios, which is unheard of, right?
Yeah.
You just cut your costs by 40%, and we're going to control premiums going forward, where some years, instead of you automatically getting an increase, even if you didn't have a claim, your premiums are staying the same or they're going down, which again, in my industry, is unheard of.
It's unheard of. I've had multiple clients whose insurance premiums doubled from last year.
Yeah.
And nothing happened.
Absolutely.
It's insane. And I think that's a great way to reinvest funds as you have a scaling and growing business. If you're saving $10,000 a year, that's maybe a quarter of the year's pay for a new hire.
Yep.
Right. And so maybe that new hire then allows you to get 3x on that pay and then increase your revenue. And it allows you to make better financially sound decisions as a business owner. I think we could talk about captive insurance, as you said, for 3 podcast episodes.
I definitely could.
But we don't have that time today.
I tell people all the time, my industry's broken. It's almost a 200-year-old industry. It's antiquated. We're working with some very big insurtech and fintech firms on these captive programs, again, to help the little guy, all the way down to, we've got probably 150 Anytime Fitness gyms in our health and fitness captive program that we're saving 54% of their premiums. 54.
That's crazy.
So I could go on captives all day because to me, it's the future. It really is the future for business owners and us empowering them to fire these big box carriers, right? That, have 7 different, CEOs, COOs. They've got brick and mortars everywhere, $100 million in overhead. We don't have all that stuff in our captive program. So it gives us a lot more control and gives us a lot more flexibility.
I think that's that's the path forward, right? We're looking for ways to work smarter, not harder. And as we said, we want to talk about captive for hours and hours on end. But for the listener that is interested in learning more about captive insurance, or maybe it's been a while since they had their current policy reviewed, how can they reach out to you? What's the best form of contact?
Yeah, I'd say just call the office. Again, we're here in Northeast Florida. It's 904-539-4637. Again, you call the office, you'll probably talk to my wife, Cheryl. That's what I would say. That's the first thing. We are the no pressure. Like I consider myself an educator. I love to educate business owners. At that point, you can make an educated decision on where you want to go. I tell people all the time, we're not the fastest because we're thorough. I'm not the cheapest either because cheap isn't always good, especially in our industry.
Mm-hmm.
Again, I can find you cheap stuff, but in the long run, it's not really going to do what you need it to do. But that would be the easiest way. Call our office. Let's set up a time that you and I can chat, or I can get you with one of my producers. They do the same thing that I do. We train them well. But yeah, I would say just give us a call at the office. Check out our website. It's therountreeagency.com. We have our, captive information on there. We have an American commercial auto brand that's in multiple states. That's just, we've built quite the network for commercial auto. I can't tell you, the success we've had there. That big HVAC company, we saved almost $100,000 on their auto insurance. It was $96,000.
That's a whole payroll.
That's a big influx to a business, right? And it's routine. I had a 3-truck handyman company last week. We saved $13,000. You wouldn't think there'd be that much savings, but that just shows when you're with the wrong place. And there was other stuff we fixed in there too. So that's the easiest way. Give us a call at the office. We would love to help. Awesome.
And Jeff, one final clarifying question. Although you're located in Northeast Florida, you're able to help nationwide, correct?
Correct. So we are in 8 states right now. We can add states as we go. We kind of add and remove as we go. Sometimes it just depends on what's going on in the state and if we have markets there. But yeah, I would say, lower Southeast, your Florida, Georgia, North Carolinas, Tennessee, Alabama's, Mississippi, Texas. We're kind of in this whole southeastern side. I do have resources out in Arizona and Colorado, Minnesota. So I'm not in every state, but I tell you, just give me a call because even if we can't help, my broker network is national. And so if I can't help you, I have someone that I would highly recommend that I trust. And I don't do that lightly. So if we can't help you, I can at least get you in the direction. Because, I see it a lot, Mills. People go direct to carrier and buy their insurance from the carrier level. And it's not that there's anything wrong with that, but I can promise you are not getting the full Monty, right, of what you should be getting and covering yourself, because you don't even know if you're with the right carrier, right? So that's probably, one of the biggest things is, we're going to find you the way that you need to go, whether it's with us or not.
I love that. And thank you for sharing your expertise today. If anybody watching or listening would like to reach out, all of the contact information will be in the show notes or video description below. As for now, thank you for tuning in, and I look forward to seeing y'all next time.